Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So we are down 0.1% for the week. And but we did hit a new all-time high intraday. Got up to 65.08 intraday on Thursday, and then came back down. I'm kind of 50-50 on whether this is going down next week or up. If I had a slight bias, I would probably say down. Although I've been thinking that the S&P 500 was going to be going down for a while now. It's just been completely wrong. No matter how bad the fundamentals get, people just keep on buying. The dollar is up 0.1% for the week. So we broke this trend line here late last week, went back up above it, and then settled below it. So each of these moving averages here, so the light one right there is the 20-day moving average. Then the little bit darker is 50. And then the really dark one here is the 200-day moving average. So as the moving average gets darker, it becomes stronger and more reliable. So the second one here, the 50-day moving average, it closed down below that. My bias for the dollar next week would be down, although you are going to have a bit of support just below it here at like 97.60 or so. Okay, the 10-year yield changed about 0.6% since last week to the downside. So it did go down like we thought, but got caught by this trend line that we've had drawn forever. So this is a pretty bearish looking chart. All the moving averages are in the wrong order, kind of like oil. I think we probably get a bounce here and the yields go up next week. And the Fed funds rate, this number is going to change here pretty soon. Right now it's sitting at 4 1/3, but going to go down here pretty soon if Jerome Powell sticks to his words. Mike says, great episode last week, Steve. I liked the easy explanation of what the Fed has to do and why. You're welcome. Thank you, sir. And the comment of the week, Craig says, what's hilarious is that they can't even keep up the illusion of a 2% inflation rate. Yellen should be in prison. I agree, sir. She had ample opportunity back here and here to refinance our government debt. And instead of putting it out on short duration notes, she could have put it out on 30-year notes and kicked this can way down the road, so even our grandchildren wouldn't have to worry about it. But instead, she decided to put it on short duration bonds, so they're all coming due now when the interest rate's up here and high, right? Why didn't she put it out on 30-year notes so it comes out, so it, we wouldn't be dealing with this until like way out here? I don't know. I mean, it was so blatantly wrong. I can't believe she did it. I agree with you, sir. I think it was criminal. And Rick talked about this, the VIX. So this is the volatility index, basically telling you kind of like a fear index. When this spikes way up here, like it did on Liberation Day, you could have a really good time with some stocks, right? You get some really good deals or you get some blow off tops. Looks kind of like a dying heartbeat, right? If there's any of those positions in there that you're just way up on, might not be a bad time to take some profits now, because it's likely that going forward here, and I think relatively soon, we're going to get some spikes like this, okay? Food for thought. And gold is up 2.9% for the week, so looking really good here. So we got this long-term bull flag going right here, and it looks like we're just testing the top of it. Okay, so the futures market is at 35.16, spot market 34.47. All right, now look at what's going on in the spot market right now. We got a quadruple top right here, just touching and barely breaking through, getting higher than these other ones. So pretty exciting here. Hit an intraday in the spot market at 34.53. The previous one was 34.51. I think next week we're going to break through to the upside. So I am pretty excited about this. I would not be selling any gold equities. All right. Gold divided by the S&P 500, still looking like a coiled spring. Now, this is the 200-day moving average right here. This broke above and settled above the 50-day moving average, so pretty bullish looking sign. Looking to me like gold is going to continue outperforming the S&P 500 next week. And PHYS, so new guys to the show, if you want some gold, this is where you start. This one's up 2.5% for the week. And this is how we do it. So these are the limit order lines where I would like a buy here, okay? And so if this were to get down to $25, right, you set a limit order for 25 bucks and you buy, right? And then another one for 24.25 and another one for 23. And these 15%, 35%, and 50%, basically what I'm trying to illustrate is assuming nothing has changed with the narrative, assuming that, the Fed is still going to cut rates and that, they have not balanced the budget, assuming that the narrative for gold is still on. As this gets cheaper, the deal gets better, so you want to buy more, right? So here, let's say you're going to buy $10,000 worth of PHYS, right? You buy $1,500 here when it hits 25 bucks. And then you buy $3,500 worth when it gets to 24.25, and then you buy a final $5,000 worth when it gets to 23 bucks. The risk is if it goes down and only touches the red line and then goes back up, you only establish 15% of your position. But as time goes on, I move these lines up, or down, depending on which way it's going and where I see the entry points, and you adjust until you get whatever full position you want. But that's kind of how we look at these going forward. Okay? All right, so this is where you start when you're betting on commodity. You start with the physical commodity first and then branch out into some of the miners and producers that are looking for this stuff. So easy ETF to do that is GDX. This one is up 5% for the week. So breaking out, looking great, like limit orders for $58, $54.50, and $50.50. Anytime you see this past PTPOC, that's past the point of concern. Little nuance we got from Rick Rule. Basically, once you get a double or so or get a triple, sell enough that your position is now free, right? So that's what we've done here with GDX. As far as an upside target, we talked about this last week. We got a nice little bull flag right here that looks like it's played out, and we measure this by going from the bottom of the pole to the top of the flag, and then we just drag this over like this, and we should have an upside target of about $64. Oh, 65, maybe 65 and a half. Okay, so that's the upside target. We could get another couple bucks out of this. All right, and GDXJ is also up 5% for the week. Similar pattern. I don't know that I would really call this a bull flag. We kind of had like an odd little bar there where it sold off, but still looking bullish, looking to go higher next week. As far as in the pipeline, what we got for next week we will be interviewing Vlad of the Wealth Building Blueprint podcast on YouTube. Go ahead and submit your questions. I will also be going on his show. So then I'll be making an appearance also on the Peter Grandage show. So keep an eye out for a post on that. I'll post it on this channel under the community tab posts when that goes out. I'm also going to be in the rural classroom next week. So I'll be pulling up any and all charts that you want. So everyone is welcome. We'd love to have you. That will be in the rural classroom on Thursday, September 4th at 12:30 Pacific time, 12:30 p.m. Pacific time, not midnight my time, 12:30 Pacific time on Thursday, and it is my favorite price. It's free, so you can go in there, throw up your companies. I'll pull them up on the charts, and we'll all talk about them, and I hope to see you there. There'll be a link down below. All right, and silver, this is looking fantastic, up 4.3% for the week. Now, the futures price is over 40 bucks here, and that is the highest weekly close that we have had in 14 years. So the last time we were here was September of 2011. All right, we're finally up there. The spot price is just inching in on $40. Intraday, it got up to $39.97, so 3 pennies away. Settled the week at $39.69. So looking great. Looks like we're headed higher here. I think Michael Oliver was right to be betting on silver equities. And gold divided by silver, also known as the gold-silver ratio, we got the death cross right there. So we could see the middle one right here. The middle shaded one is, the 50-day moving average crossing below the 200-day moving average. That is a death cross, signaling that it's more likely than not that this chart is going to go down, this ratio chart, and that's exactly what happened. You can now trade 86 ounces of silver for 1 ounce of gold. Does look like it's got a little bit of support kind of around where we are now, maybe the 85 to 1 ratio. It might get a little hiccup, but I think more likely than not that silver is going to continue to outperform gold here next week. And PSLV, so this is your physical silver on the stock market. Buy it with a click of a mouse. Here's your red, yellow, and green lines. I like a buy limit at $12.40, $11.75, and $11. And I think, honestly, I probably need to move these lines up a little bit because we've just had a little breakout here in silver. And I have very little confidence that this $11 one will get hit. I think we're going to need a pretty radical liquidity crisis for that to happen. And SIL is up 5% for the week. A lot of that coming on Friday. I like limit orders at $51.50, $47.50, and $43. This one is looking great. Also had a bull flag right here. And if we measure it just like we did the last one, so let me draw this, just make sure we're all on the same page right there. Bull flag, right? And then we take our little handy dandy target tool here, go like that, up to the top. We measure the pole. And then we measure the breakout. So see right there where it broke out, right at the lower part of that. Shrink this down. What is our upside target? Looks like it's $61 and we'll call it 50 cents. Could be the upside target here. So I wouldn't personally be buying at $58 to make it to 61.5, but that one's on you. All right, and SIL is up 5.5% for the week. So same thing, breaking out. Getting a lot of questions here. Should we be selling gold stocks? Should we be selling silver stocks? Both of them are, I mean, looking to me like they're breaking out. I would not be selling anything. I think we need to implement what the kids call diamond hands. Diamond hands, hold. It's a strong hold. Do not sell. Do not sell. Hang on. Hang on for dear life. And copper, paging Dr. Copper is up 3% for the week. So had a little, okay, so a bit of a bear flag that we've been talking about for a while here and has not broken down yet. I'm becoming less and less certain as every day that goes by that this is not going to play out, and this is actually just kind of carving out a little bit of a bottom here. So I'm feeling less confident that we're actually going to get a little breakdown back to this support line. Maybe we will, but I'm kind of thinking no. All right, and COPX is up 3.3% for the week. So basically the dollar is getting sacrificed here. Everyone sees it, and commodities are killing it. So very bullish looking chart. All the moving averages are in sequential order. You got the 20, the 50, and the 100. I like limit orders here at $46.50, $43.60, and $40. And I might need to move that green one up a little bit. Maybe putting the green one up around 41, 41.50 on this 200-day moving average might be a little bit more prudent. But had the same kind of similar pattern here, like a little bit of a pennant, and then you can measure the breakout target, just doing the same thing, just like we did with the bull flag. Is you just take the pole right there, move it up to the breakout zone, and then we can see that we could have an upside target here of around, we'll call it $52. Okay? And Zanzibar says, I'd say we're going to get sick of winning, but I don't think that's true. I don't either. So much so, I named the show after it, In It to Win It. Right? Okay, if you want to find setups like this, see, we've just been buying copper on pullbacks like this, right? If you like charts like this, then you're going to love our technical analysis series. We got a link down below where you can check it out, or just go to the website, stevebartonmoney.com. If you go on the homepage here, scroll right down, click here to master the markets with our technical analysis series, technical analysis for beginners. Learn what price action, RSI, MACD, all these things, all my favorite indicators. You get 3 hours, over 3 hours of video content showing you how to set up your charts just like mine on the screen here, click by click. Okay, I go over mouse click by mouse click how to do it, or you can tailor it to however you want. All right, get my favorite patterns and indicators so you have a better idea of when to buy and when to sell, which is the entire game. Also, make sure you're signed up for the free newsletter. There's no spam. I'm not going to sell your email to some marketing company or anything. It's just you and me, my best ideas of the week. So if you go to stevebartonmoney.com, right here, you can type in your email, subscribe, and that's how you get the free newsletter. Or you could click on this one right here under newsletter, and then type in your email there. Takes you to the same spot. All right, would love to have you. You get one email once a week at 10 a.m. every Sunday, 10 a.m. Pacific time every Sunday. All right, and COPJ is up 2.9% for the week. So I don't see any buys here. I don't really see any tradable patterns. No, I just have your limit orders set here for 25.50, 24.25, and 22.50. And uranium is up 2.9% for the week, just like COPJ. I think we found a new floor here. It's around 72, 73 bucks, somewhere around there. I mean, there's just a lot of price action around that level. The green lines here are the spot price of uranium. Looking great on uranium. I think we're entering into the next leg up, right? And a real easy way to play that here is SRUUF is up 6.7% for the week. So absolutely fantastic. We are up to 68.6 million pounds of uranium sitting on the shelves in a warehouse that is unavailable to the utilities. So it is ours. They could not have it. Sprott purchased another 50,000 pounds this week. Premium subscribers sitting on some nice little profits right here. Up on this one, had a nice little run here since our purchase. All right, what is that, 12 or 13%? Yeah, 13, yeah, 12, 13, yeah, somewhere around there. In just a few days, not bad at all. Leonard asks, can you explain why there have been so many 50,000 pound lots this year? Is it because the cupboard is getting bare, or the holders are just selling what they need for cash flow and saving for growth? Well, you are right, sir. I'm going to share my screen here and we will take a look at it. Someone put together this spot tracker. I don't know who it was, but bless their little heart for doing so. And this is basically what Sprott started with back here in 2021. And these are their purchases. So if you look right here back in 2021, you can see at the time they're 300,000 pounds, 600, 400, 500,000, 1.4 million. 1.2 million, 1.4 million pounds, just massive amounts of buying here, just gobbling up as much as they possibly could of U308. And then you'll see as we scroll down here, the size of the purchases gets scarcer and smaller. So now we're into 2022, and then we'll get down here into 2023 and 2024. And then if we come into here to the most recent purchases here of 2025, we can see that there's started up some in July, right? 650,000, 100, 130, boom. Now enter July, 50,000, 50,000, 50,000, right? There's just not much there. So this is forecasting how tight the spot market is, and that most of the trading volume here and most of it is taking place on the term market. So it's taking place on the market that's happening 12 months or more into the future, not the one that's happening 12 months or less, okay? So this is a tight little market, but everyone can see this spot price on their screen, so that's what a lot of them trade. But we got the WNA coming up, some serious catalysts for uranium. I think we're going to absolutely kill it here on uranium. All right, thanks for the question, Leonard. And URNM is up 6.6% for the week. Took a little profits here on Tuesday. Just took a little more off the table, and URNJ is up 7.8% for the week. So looking great on these. You know, we just had some really nice runs here in URNM and URNJ, and I think it's prudent to take some off the table. You know, I mean, what's this one from the bottom down here up to the recent top? 75% in URNM. We'll run the same thing here for URNJ from the entry point up to our sell zone, 91%. Makes sense that the juniors are up a little bit more than the URNM, more of a leverage play. If you like setups like this and you want some real-time updates, you're going to love our premium service. So when you sign up, you'll be grandfathered in, and as long as you stay subscribed, your price will never, ever go up. I'm very grateful and honored to everyone that has signed up, so thank you for that. Here's some feedback from some premium Substack subscribers. Universal says, thank you, Steve. Great overviews. Joe says, nice job, or nice overview on top of Monday market moves. Mark says, thanks, Steve. You're doing a great job with your new premium service. Thank you, Mark. And Ed says, Steve, I'm not sure if I got in on the discounted premium rate in time, but my first trade has paid for more than my annual membership fee. I never would have chased it after watching it run without some reassurance. That is awesome, Ed. I love making money and I love helping other people make money. But you're the one that pulled the trigger, sir, so give yourself a little credit. David says, thanks again, Steve. I love the content, love your enthusiasm. It is contagious. I'm learning a lot, enjoying my time, and even making a little money. There you go. Trader Tom says, Steve, your charting skills are A+. Thank you. Thank you, Trader Tom. I appreciate that. So you get my company-specific stocks that I'm buying and selling with my own money. You get real-time updates. Last week, I made some moves in the portfolio, like these ones here, and I sent them out real time to premium subscribers. I would love to have you come on board. My aim is to make things user-friendly, easy to follow, one click and you're there. You get a discount for signing up for the annual version, so you get a couple of months free. And if all you got to do is just download the Substack application on your phone or on your computer, use the email that you want. You can enable notifications, so when I send out like a flash update during the week, then you get real-time alerts when something interesting happens. Easy peasy lemon squeezy. You sign up at stevebartonmoney.com in the newsletter, like the free newsletter. At the bottom of it, it'll be upgrade to paid, upgrade to premium, and that's where you'll start getting the real-time alerts, and you'll get a whole nother Monday market move style video every week at 10 a.m. Pacific time on Sunday that goes over the individual stocks and companies that we're invested in for the real alpha. All righty. And crude oil is up 0.6% for the week. So this one is kind of like we're talking about before. All the moving averages are in the wrong order. So you have the 20, then the 50, then the 200. That is bearish, meaning that it's more likely over the coming weeks that oil is going to go down instead of up. There might actually, now that I'm looking at this, there might actually be a little bit of a shorting opportunity here in oil. I'm going to have to keep an eye on that, and yeah, we'll see. If there is, I'll let you guys know through the Substack. All right, and XLE is up 2.6% for the week, so shot up, blew through our little trend line that we had drawn here, so we can hit delete on that thing. Don't need that no more. Now that I'm looking at this, there is a little baby bull flag here. I mean, this is nothing that's really tradable, I don't think. Maybe if we went out on the 30-minute, we could catch it a little bit more. No, not really. Yeah, okay. Anyhow, shot up. Next level of resistance is, I didn't draw a line for it, but the next level of resistance is going to be 91.75. And then after that, most of your resistance, a stopping zone for this is going to be at $93.50. Okay? So if you're trading this and you want to take profits, I would do it on that line. All right, and natural gas is up 11.1% for the week. So we were just heading down and then boom, shot right back up this week. I thought we'd be continuing down on natural gas. It said nope, went right back up to that $3 mark, or a third of 1 penny short of that. $2.99.7. So just right around the $3 mark. Looks to me like natural gas is going to go up next week. And FCG, our natural gas ETF, is up 2.7% for the week. It's actually hitting on resistance now. So I would expect next week it's probably going to reverse down. And you can see how it's got a little bit of a topping tail there, kind of like a bearish reversal bar here. That would tell me that it's more likely to go down next week than up. Limit orders at $22.75, $21.75, and $20.50. And coal, thermal coal, down 0.3% for the week, so still following the path that Matt Warder laid out. Met coal is down 0.6% for the week, kind of following the same path. He basically showed both of them the same patterns. I could draw it for you here if you want. Basically like kind of ironing out around October, November, and then back on up. And coal, our favorite and only coal ETF, is up 1.6% for the week. So we're going to get a golden cross right here, or we already did. So the 50 crossing above the 200-day moving average. Now this would be slightly more bullish if this 200, let's say this 200 moving average was kind of like sloping up like this. So this darker blue line was kind of sloping up, and then you got the 50 crossing it. That'd be pretty bullish. This is still bullish, but just not as bullish, right? I'd like to see this come back down, maybe hit right here on the 50. I think that'd be a pretty sweet setup. And I got the red line drawn, not coincidentally, on that zone at $19.50 for a limit order. All right, and we also have the New Orleans Investment Conference coming up, so I am super excited about that. That is November 2 through 5, November 2nd through 5th. So these conferences are also where I get a lot of the companies for the premium portfolio. And this is, I'll let you in on my little secret. This is what I like to do. I like to show up early, and I like to walk the company room floor, right? And when I leave, you know, I walk the room again. So I get there early and I leave late, right? And I want to find companies that have a similar work ethic, right? Who is consistently there working all day in front of their booth? Who is showing up late and leaving early? Okay, so this is information that you can only get in person at these conferences, right? And you cannot get that from looking at their website or watching their YouTube interviews. Make sense? So my favorite part is being there. And seeing you guys. I love how cool it is to meet the people behind the screen names. The link is down below if you guys want to go. New Orleans is a fantastic place. It's a lot of fun, and I'd love to meet you there in person. The link is an affiliate link, so if you're going to go, please use the link, and the show will get a little kickback. It's not going to cost you an extra dime. I really look forward to seeing you there. If you can't make it, I will report on the entire thing in the premium service. All right, now Platinum is up 0.5% for the week. So this one has me, this is my nervous face, okay? This is me nervous on Platinum, all right? And it's because we have what's called a bearish formation here. This is a bear flag. It closed below the 50-day moving average. No bueno, okay? So we could have a little breakdown in Platinum here. I think that's probably more likely than not. Yeah, I'm kind of waiting for this to just kind of get like a little washout sale here. Now, if we go to PPLT, so this is physical platinum on the stock market. So if you want to bet on platinum, this is the easiest and safest way to do it. Not that a chart that looks like that is safe, but not that a chart that looks like that is safe, but this is the safest form that you can bet on platinum on it, right? So I'm hoping it gets cheaper and these limit orders get triggered. Maybe they will, maybe they won't. But first limit order at 120, then 110, and then $100. And yeah, just want to see this wash out like one last time. Give us another second bite at the apple. All right, and platinum divided by gold. Gold, let's see, how would I read that? Gold outperformed platinum by 2.25%. This has the same kind of formation. See how we got a bear flag here, indicating that this chart is probably going to go down, which would mean that platinum would underperform gold or gold would outperform platinum, however you want to look at it. You know, platinum could go flat and gold goes up, and then that would make this chart go down. That would make sense. Same thing here with silver. We talked about this last week, and look, it finally broke down. So with silver shooting up over the last couple of days, that has caused this platinum chart to go down. You know, you can measure this just like you would a bull flag. You just go from the pole down there and then extend it down, and that'd probably bring you down around here. I'm just guessing right now around 3150. Okay. And the Bloomberg is up 1.1% for the week, so looking pretty good here. Shot up above the 200 and the 50-day moving average here on Friday. Thank you, Jerome Powell. And nickel futures still hanging around that 15,000 per ton mark, but did shoot up to the upper side of that. We have this downward sloping 200-day moving average right here. It'd be nice if we could close up above this. And then I think that would put in some pretty good bullish news for nickel here. See how we got up above it here, back here in October of 2024, came right up to it, bounced, got rejected, came back down. Now it's getting slower and slower, and I think we're getting close here to where we're finally going to have a breakout in nickel. Easiest way to play nickel is this one, NIKL, the Nickel Miners ETF, down 0.4% for the week. So I like limit orders here at $11.50, $10.75, and $9.50. Hopefully we get a retrace back down here. That would create a nice little double bottom here. And a couple of guys wrote in the premium service and they said, every limit order line that you draw, I add 5 cents to that and it almost always hits. So there is something to that. Maybe I'm a little too cheap with these lines. So like these are ballpark, right? Like, you know, if you want to put 1150, whatever, you know, do that. That's what I do. But, you know, like this one right here got down to $11.55. So had they put that there, it would have hit. Right. So use these as ballparks. If it gets down to 1175 and you really want some nickel miners, then just hit the buy button. You know what I mean? These are ballpark. Okay. And pick ETF. So our favorite metals and mining ETF. Now this one's kind of interesting. Okay, so this one's down 0.1% for the week. Now I met a guy out at the Rural Symposium on the boat cruise. His name was Bruce. I should probably have him on the show. He's a trader. And he mentioned something. His favorite kind of trade is this setup right here. So if we look, this is the Fibonacci retracement. So this orange line is the 38.2% retracement. If you go through my TA series, I go over all this. 38.2, middle one right here is the 50% retracement, and this one is the 61.8. So 61.8 is my favorite. Bruce's favorite is this setup right here. 38.2, boom, came down there, hit, and went up. And then now, if we run another Fibonacci retracement here, and we just go from the bottom of that up to the top of this one right here, we can see that this one's hitting right around that 38.2 as well. Nice reversal bar to the upside and moved on up. So what he likes to do is he likes to run options going out every time this hits down on the 38.2. If you get a reversal bar like that, option to the upside, boom, capture the next one. So it'll be interesting to see here if this actually plays out, or maybe it does come down and correct a little bit more. But I thought that was kind of a neat little stair step bet there, and kind of a neat example of it here on the pick ETF. All right, and Bitcoin is, as of this moment, down 4.6% for the week. So last week our bias was down to the 112 level. It hit that and blew through it. So I'm getting pretty bearish pretty quick here on Bitcoin. I think the next level down is going to be 103, and it wouldn't surprise me at all if we hit that next week. I think the market is going to go risk off here pretty soon. When you take into account the VIX, when you look at the S&P 500, when you look at the tech stocks that are rolling over, and they're the ones that are it's like the Mag 3 now in the S&P 500, and they're not having a good time. I mean, the projections that they're putting out there and the money they got to make to keep actually the stock price going up is unattainable, okay, at least in my opinion. So I think Bitcoin is going to go risk off here pretty soon. I think we've broken down and we're going to start settling down, at least coming down to the 200-day moving average here, probably in the next week or two. Alrighty, well, I hope you guys got something out of that. I love doing this, and thank you guys for being here. If you want to play a little more alpha, make sure you check out our premium service on Substack. There's a link down below, or go to the website. You get a whole nother video just like this with company-specific charts, real-time updates of what I'm personally buying and selling. And remember, when you sign up, you are grandfathered in at that price. Thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.